Welcome students and scholars. This is the ASC 105 MCQ practice session. In this video, we will test the foundation you built across GAAP authority, codification research, materiality, conceptual framework, recognition, measurement, present value, and expected cash flow. When each question appears, pause the video, choose your answer, and then continue to the explanation slide. Do not try to guess quickly. Try to identify the concept being tested, eliminate weak options, and then select the best answer. Here is question 1. Read the stem carefully and focus on the phrase Best Description of ASC 105. This question is testing whether you understand the role of ASC 105 in the US GAAP system. Is ASC 105 mainly a detailed transaction standard, a tax rule, a replacement for SEC guidance, or the foundation for understanding GAAP authority? Pause now and choose the best answer. The correct answer is A. ASC 105 explains where authoritative GAAP comes from and why the codification carries weight in financial reporting. Option B is wrong because ASC 105 is not a journal entry manual for every transaction. Option C is wrong because ASC 105 does not replace SEC guidance for public companies. Option D is wrong because ASC 105 is about financial reporting under US GAAP, not tax reporting. The key learning point is this: ASC 105 is a foundation standard about authority, not a detailed accounting treatment guide. Here is question 2. The key phrase is SEC registrant. Before answering, separate a public SEC registrant from a private non-public entity. Ask yourself whether a public company follows only the FASB codification, whether concept statements alone control the answer, or whether applicable SEC rules and interpretive guidance also matter. Pause now and choose the most accurate statement. The correct answer is B. SEC registrants must consider applicable SEC rules and interpretive guidance along with the FASB codification. Option A is wrong because FASB concept statements guide reasoning, but they are not the only source considered for SEC registrants. Option C is wrong because textbooks do not override the codification. Option D is wrong because disclosure cannot replace compliance with required accounting treatment. The exam trap is treating disclosure as a substitute for GAAP. It is not. Here is question 3. This question tests what to do when no directly applicable authoritative guidance exists. Do not answer from convenience, management preference, investor communication, or tax planning. Think about the disciplined research path. When direct guidance is absent, what is the next proper step inside the GAAP authority framework? Pause now and select the best option. The correct answer is B. When no direct authoritative guidance exists, the accountant should first consider accounting principles for similar transactions or events within authoritative GAAP. Option A is wrong because management preference does not create accounting authority. Option C is wrong because ease of explanation is not a valid GAAP selection criterion. Option D is wrong because tax rules do not determine financial reporting under US GAAP. The key point is that professional judgment still starts with authority, not preference. Here is question 4. The phrase to focus on is generally non-authoritative. This is a source ranking question. Some sources are binding. Some sources support judgment but do not override authoritative GAAP. Read the options and ask which source helps reasoning when direct guidance is absent, while generally not being authoritative GAAP itself. Pause now and choose your answer. The correct answer is A. FASB concept statements are generally non-authoritative, but they can help accountants reason through issues. Option B is wrong because a valid ASC paragraph directly on point is authoritative GAAP. Option C is wrong because an effective ASU amendment incorporated into the codification becomes authoritative. Option D is wrong because applicable SEC guidance matters for SEC registrants. The trap is confusing conceptual support with binding authority. Concept statements guide reasoning, but they do not override the codification. Here is question 5. This is a codification navigation question. Look at the ASC reference structure XXX-YY-ZZ-PP. Treat it like an address. The first part identifies the broad topic, the second part narrows the scope, the third part points to the section, and the final part points to the paragraph. Pause now and identify what YY represents. The correct answer is B. YY represents the subtopic. Option A is wrong because the topic is represented by XXX. Option C is wrong because the section is represented by ZZ. Option D is wrong because the paragraph is represented by PP. The practical takeaway is simple. Read ASC references like a structured address. Topic, subtopic, section, paragraph. Once you understand that order, codification research becomes much easier and much faster. Here is question 6. This question tests common ASC section numbers. Focus on the word disclosure. In the codification, certain section numbers commonly signal the type of guidance you are reading. Section 15 often relates to scope, Section 25 to recognition, Section 30 to initial measurement. Which section commonly contains disclosure guidance? Pause now and choose the answer. The correct answer is D. Section 50 commonly contains disclosure guidance. Option A is wrong because Section 15 generally relates to scope and scope exceptions. Option B is wrong because Section 25 generally relates to recognition. Option C is wrong because Section 30 generally relates to initial measurement. The learning point is that section numbers help you predict the kind of answer you will find. For disclosure questions, Section 50 is often a natural place to search. Here is question 7. This question is about the first step before searching the codification. Do not jump straight into search terms. A good search depends on a clear accounting question. Think about whether the accountant should first define the issue, choose a desired outcome, begin with an internet summary, or assume no GAAP guidance exists. Pause now and select the best answer. The correct answer is A. Before searching, the accountant should identify the accounting problem clearly. Option B is wrong because smoother earnings is not a valid research objective. Option C is wrong because internet summaries may support background learning, but they are not the starting authority for formal GAAP research. Option D is wrong because assuming no guidance exists before researching is not disciplined. The key point is this: bad questions create bad research and bad research creates bad conclusions. Here is question 8. This question asks why plausible alternative accounting treatments should be identified during research. Focus on the purpose of alternatives. Are alternatives used to reduce taxes, avoid authoritative literature, lengthen disclosure, or evaluate possible treatments before concluding? Pause now and choose the best option. The correct answer is B. Identifying plausible alternatives helps the accountant evaluate possible treatments before reaching a conclusion. Option A is wrong because tax effect is not the basis for selecting GAAP treatment. Option C is wrong because alternatives do not replace reading authoritative literature. Option D is wrong because the purpose is not to make the disclosure note longer. The professional lesson is that judgment requires comparison. A defensible conclusion usually considers why one treatment is stronger than the alternatives. Here is question 9. This question tests the meaning of materiality. Do not answer mechanically from a percentage. Think about the user decision focus of materiality. Is materiality only a fixed threshold? Only a note disclosure concept? An excuse for intentional non-GAAP accounting? Or a judgment based on entity-specific facts and users' decisions? Pause now and select your answer. The correct answer is B. Materiality depends on entity-specific facts and whether the information could influence user decisions. Option A is wrong because materiality is not based only on one fixed percentage. Option C is wrong because intentional non-GAAP treatment cannot be justified simply by calling an item immaterial. Option D is wrong because materiality affects recognition, measurement, presentation, and disclosure. The core idea is that materiality has both quantitative and qualitative dimensions. Here is question 10. This question tests qualitative materiality. Look for a small misstatement that may have a serious reporting consequence. The issue is not merely the size of the number. Ask which option could change how users interpret performance, risk, or the financial statement story. Pause now and choose the best answer. The correct answer is B. A small misstatement that changes a profit into a loss may be qualitatively material because it changes a key outcome. Option A is wrong because if there is truly no user decision effect, qualitative materiality is less likely. Option C is wrong because ordinary rounding does not create materiality by itself. Option D is wrong because precision alone does not create materiality without reporting significance. The trap is focusing only on amount and ignoring consequence. Here is question 11. This is a conceptual framework question. Focus on the word fundamental. Some qualities are fundamental, some are enhancing, and some are constraints or related concepts. Read the pairs carefully and identify the two qualities that useful financial information must have at the foundation level. Pause now and choose your answer. The correct answer is A. Relevance and faithful representation are the two fundamental qualitative characteristics of useful financial information. Option B is wrong because timeliness and comparability are enhancing qualities. Option C is wrong because verifiability and understandability are also enhancing qualities. Option D is wrong because materiality is related to relevance and cost is a constraint. The exam trap is mixing fundamental qualities with enhancing qualities. Useful information needs relevance and faithful representation first. Here is question 12. This question asks, which option is an enhancing qualitative characteristic? Do not answer just because a term sounds familiar. Classify each term. Is it a quality of useful information, a financial statement element, or a measurement basis? Pause now and choose the option that belongs to the enhancing qualities category. The correct answer is A. Comparability is an enhancing qualitative characteristic because it helps users identify similarities and differences across entities and periods. Option B is wrong because liability is a financial statement element. Option C is wrong because revenue is also a financial statement element. Option D is wrong because historical cost is a measurement basis. The learning point is classification. In accounting exams and professional analysis, familiar words are not enough. You must know the category each word belongs to. Here is question 13. This question tests recognition under FASB concepts statement 5. Focus on what must be true before an item enters the body of the financial statements. Is recognition controlled by tax approval, automatic market value measurement, disclosure only, or whether the item meets the definition of a financial statement element? Pause now and select the best answer. The correct answer is A. Recognition requires the item to meet the definition of a financial statement element such as an asset, liability, equity, revenue, expense, gain, or loss. Option B is wrong because tax department approval is not a recognition criterion. Option C is wrong because GAAP does not always require market value. Option D is wrong because disclosure alone is different from recognition. Recognition means the item enters the financial statement totals. That is why the definition test is so important. Here is question 14. This is a present value calculation question. A company will receive $10,000 in 2 years and the discount rate is 5%. The formula is $10,000 divided by 1.05 squared. Before answering, focus on direction. Are we moving future cash back to today or are we compounding today's cash forward? Pause now and choose the closest amount. The correct answer is A. 1.05 squared equals 1.1025 and $10,000 divided by 1.1025 is approximately $9,070. Option B is wrong because it ignores the time value of money. Option C is wrong because it compounds forward instead of discounting back. Option D is wrong because $5,000 is not supported by the given rate and time. The key rule is simple. Present value discounts future cash back to today. Here is question 15. This question tests expected cash flow before discounting. Do not choose only the most likely scenario and do not choose the highest possible scenario. Use probability weights. Multiply each possible cash flow by its probability, then add the weighted amounts. Pause now and calculate the expected cash flow. The correct answer is A. $6,000 at 25% gives $1,500, $8,000 at 50% gives $4,000, $12,000 at 25% gives $3,000. The total is $8,500. Option B is wrong because $8,000 is only the most likely single scenario, not the weighted average. Option C is wrong because $12,000 is only the maximum outcome. Option D is wrong because it does not correctly weight all scenarios. Expected cash flow uses all outcomes. That completes the ASC 105 MCQ practice session. You have now tested the full foundation: GAAP authority, SEC overlay, similar authoritative guidance, non-authoritative sources, ASC address structure, section purpose, research discipline, materiality, conceptual framework qualities, recognition criteria, present value, and expected cash flow. If you missed a question, do not treat it as failure. Treat it as a diagnostic signal. Revisit the concept, understand the trap, and try again. In the next topic, we move toward ASC 205 and financial statement presentation. Please like the video, share it with your colleagues, and subscribe to Commerce Regiment for more structured US GAAP learning.